Good morning, good afternoon, good evening, traders. Wherever you are in the world, I hope you're doing well. I hope you're safe. I hope you're healthy. I hope you've got a big smile on your face. And I hope you're catching pips as usual. Pips of Persia here. In today's video, we are finally going to go through a concept that a lot of you have been asking for. Not a concept, perhaps the last piece of puzzle of Wyckoff, let's say, or whatever you want to call it, which is redistribution. We've had many videos for accumulation, distribution, and re-accumulation. I'm going to be leaving links down in the description in an order for you to watch for them to make a little bit more sense. But we've never recorded anything for redistribution. So finally, we are going to be recording this video. We're going to be going through redistribution and do a chart breakdown for redistribution as well. Now, before we start to speak about redistribution, I want to mention a couple of things about reaccumulation. But having said that, if you haven't watched the previous reaccumulation videos, go and watch these couple of videos over there. And once you come back to watch this video, it will make a lot more sense, because I'm not going to go into too much detail in regards to reaccumulation now, but it would make it a lot easier if you know what it is before you understand redistribution. Now, generally speaking, in those videos for reaccumulation, we always speak about within an accumulation, the market should be manipulating the lows and breaking structure points to the upside. That's generally what an accumulation is: a manipulation of the low, manipulation of the lows, and a break of structure to the upside, right? So let's say, taking into account just this specific schematic over here, this would be your preliminary supply, and this could be your buyer's climax all the way down here for that shakeout or sign of weakness, which could look like a distribution at the start. The rally back up for that automatic rally, which could again be mistaken with a potential UT of a distribution back down. But normally this is where the market will start to give it away, because it will start to create a creek and that final manipulation of the lows and that final taking of the lows before going higher. The creek followed by that spring. And normally you can tell by these characteristics, because that spring will be a quick take of these lows. And once that happens, you will be able to see that the market is starting to challenge structure points and spending time on the other side of the structure once it breaks that structure, right? So that's a very quick breakdown of generally what we mean by manipulation of the lows and a break of structure to the upside. Now, this, by the way, for those of you who trade supply and demand, it is important to actually mention that this is a rally-based rally on a higher time frame. I know a lot of you, will look at areas on the higher time frame, that is the market going up, stalling, maybe for a few candles, and continues in that given direction. And a lot of people will look at this as a rally-based rally, Some others would be identifying that as a zone of demand for future trades. So as a zone of demand waiting for this market to potentially come back into this level before going higher. I want everyone to understand that this rally-based rally, or this zone of demand, or these punch candles or institutional candles in the middle of the range, when you find them, these are practically all reaccumulations or redistributions on the lower time frame. So all of that on the lower time frame, it should look like a reaccumulation. And once you start to identify these zones as reaccumulation and have a look at it from both a Wyckoff perspective and smart money perspective, it would give you a much higher accuracy in knowing which levels it will or will not bounce up from or reverse at that given level. And on top of that, be able to have much smaller stop losses based on lower time frames, rather than having stops, for example, if you want to buy it over there, having stops all the way down here on a 4-hour or daily time frame, right? Anyway, that's conversation for another video. Now, this is that general reaccumulation. So what I want to do now is I want to look at a chart example based on reaccumulation. Now, this is actually in replay mode right now, and the replay mode stopped in 23rd of September 2020, so about 8 days ago. Currently is Thursday, 1st of October at 9:45 PM UK time, give or take. So yeah, now, this is currently in replay mode, but let's go ahead and have a look at generally what's happened in this market. So you are able to now see this. We can actually start on the higher time frame for this. You can see this rally-based rally on the higher time frame. 2 hour will probably look better. This general rally-based rally, even on the 4-hour time frame, let's say 3 candles in the middle of this range that have gone silent, have gone sideways. Silent in the sense that there's not much movement in that area. Now, when we look at that same picture on the 1 minute time frame, it looks like a rally, a reaccumulation, and a continuation of this market going higher. Now, let's start to mark up this reaccumulation. This could be our preliminary supply, all the way up there. This could be the buyer's climax, all the way down here for that sign of weakness or shakeout. So this could be an automatic reaction, secondary test. I'm not going to write these down, but this could be automatic reaction and secondary test. Now, once this has happened, the market has made this move back up to the same levels as the buyer's climax. Sometimes it might be a little bit higher or lower, but generally speaking, this is that automatic rally back up. Now, from there, the market started to go a little bit more silent, a little bit more sideways, a little bit slower. That's your creek. Now, this is an example that we didn't get necessarily that final spring to the downside. If you remember, in some reaccumulation examples, you will get you'll get a markup phase with a spring before it goes higher. In some other reaccumulation examples, within that sideways market, you'll just get a creek, and the market just starts to break structure points to the upside. And these will be the times that you'll just wait for a pullback and take these type of trades to the upside, right? Now, over here, this is our reaccumulation. Another way to even look at this, you could be having that sign of weakness over here, and you can even consider this your final spring to the downside, right? Final spring to the downside, and that would have even been a break of structure. And from a structural perspective, then that would be just a move, just a rally, so a structure breaking move, the pullback and the continuation, right? But anyway, as I've mentioned in the previous videos, I don't really care about the markup. It's more so the general structure. I don't know how many times I've said structure now. Got to get a structure counter. Anyway, let's move on. From there onwards, the market started to break above, I'm going to say, this reaccumulation region, this reaccumulation zone, I'm going to say, and started to challenge the highs and spend time on the other side of the level. From there onwards, it was just this constant bullish trend. So you would be able to identify this accumulation from way before. Even if this market was in this phase over here, you would still be able to identify the start of this bullish trend. Low, low, high, higher low, higher high. So the beginning of this bullish trend. So you would be assuming a pullback, especially now that we've broken above the reaccumulation range. So a pullback to then be able to trade this back up. This is where you can maybe look at some higher time frames, let's say 3 minutes or 5 minutes in this case, to be able to find some entries. For example, this 10-minute imbalance looks pretty good for your entries. 10-minute imbalance over here, 50% of the full closure of that imbalance, right? Anyway, this market even, pulled back to this final institutional candle, so you could have even had your entries over there, even easier. Now, some of you might be looking at this now wondering what's happened after, so let me actually play it a little bit more. So this continues to go in that given direction, and I want you all to be able to actually see that this market did indeed have a very decent run into the desired direction after that whole reaccumulation. I think I can get rid of these now. So this move back up was quite a nice move to be able to catch. About 90 pips, but your stop losses, you'd be looking at very, very small stops. You'd be looking at probably 6 pip stop losses for 90 pip gains. Not bad at all. Now, here's the thing. Some of you might have been looking at my candles and looking at the charts and wondering how comes it looks flipped. That's actually because this chart is actually flipped. So although we were looking and analyzing this from a reaccumulation perspective, this invert scale option was on. So in reality, this was a redistribution example. This was an example exactly for a redistribution, right? So you can go back, you can put it in replay mode, go to the 5 minute or 1 minute time frame, 23rd of September at 9 p.m. UK time, let's say, for you to be able to identify the same thing. But this is redistribution, it's the same thing. So if you can identify a reaccumulation, you can identify a redistribution very easily. It's literally the same concept, it's the same move. Okay, so this from a redistribution perspective would be marked up as preliminary support.
This would be your selling climax, automatic rally, and this over here could be your secondary test. Zoom into the 1 minute so you can see the creek a little bit easier. That would be the creek over there. And within there,
you can even look at that as UT and UTAD. So look at this whole creek as another distribution with preliminary supply, bias climax, sign of weakness. This could be, again, secondary test. Let's say UT and UTAD. This could have given an extra even high. So because there's an extra one over here as well, right? It's an extra push to the upside. So in this case, after even this break of structure to the downside, you would have been looking for that pullback for the entries based on that distribution within a redistribution range, if that makes sense. Now, there is another way to actually look at that in terms of the UT and the UTAD of that redistribution. So after that seller's climax over here, you could even look at it from a different perspective. So that could be your seller's climax, so this could be that element of shakeout to the downside, this manipulation of that low, and from there the market would just create that UT, UTAD, challenge structure points to the downside, pull back, create this bearish trend, and as we saw before, off it goes. So the way that I want everyone to look at it now is, on the previous videos you have had videos in regards to reaccumulation, and a lot of you, once you watch those videos, it started to make more and more and more sense. So if you can identify reaccumulation, you can just as easily identify redistribution. And not only that, once you are identifying redistributions and reaccumulations, oftentimes you'll be able to find smaller accumulations or distributions happening within the same range. The same way that this whole range over here was a redistribution, or on another, with another perspective, it would be a drop, base drop, or an area of supply on the higher time frame. It's the same thing, right? But within that redistribution, you had an example of a normal distribution over here as well. Now, in this video, we are not going to be speaking about any actual live trade examples. This is just going to be a case study, and simply because I saw this a little bit too late, if I want to be honest with you. So this was the screenshot taken on September the 23rd. So unfortunately, I saw this redistribution after the market was gone. And yes, we could have found re-entries and stuff, but it wasn't the same, you know. It wasn't the same to enter it like based on this pullback that we were speaking about, or this pullback. But this one would have been the easiest one. But either way, that's a very nice case study for you to even be able to now put it back in replay mode for yourself and start to look at it, because we're on the lower time frame, so it's not going to be there for much longer. After a certain while, TradingView will start to say, if you go too far back on the lower time frame, it doesn't allow you. It will say the data point is like too far or whatever. There we go, like that. But I hope this video was useful. I hope you gained value from this video. I do encourage you to go and start to look at this in your own time. Now you can start to have a look at other redistribution examples. And if you want to identify it easier, if you find that you are good at identifying accumulations and reaccumulations, then what you can go ahead and do is simply click on invert scale and start to identify reaccumulations instead of redistributions, and see how it works. But just remember to always check it, to not end up executing trades based on invert scale, because that won't go well. But with that being said, do make sure to press that like button down below if you have learned something today. Do make sure to subscribe to the channel as well to get notified when there's more content coming out. I hope that this video was useful. Let me know if you have learned something down in the comment section below. Do make sure to put this into practice properly. I can't stress this enough. It's not these videos that will help you. It's what you do after these videos. Okay? It's how you practice these and how you apply it to your own charts. But with that being said, have an amazing day, and let's catch some pips.